Hello, everyone. All right, great to be here speaking with you.
This is Malcolm Tan from Singapore. He is the Chief Strategic Advisor, Technicorum Holdings. He is a serial entrepreneur, founder of Gravitas International, founder of Crypto Technologies, Chief Strategic Advisor of Technicorum Holdings, Strategic Advisor Kingswap Dex. He'll be talking about the predictions of Ethereum, DeFi, and beyond 2020. Over to you, Malcolm. Go ahead.
Okay, thanks very much for the kind introduction, Rajan. um, Great to be here speaking with all of you. And today my topic will be on Ethereum predictions, DeFi, and beyond in 2021. So first of all, I've got into this space after being a serial entrepreneur since over 10 years ago. And I got into this space in crypto and blockchain digital assets since late 2017. And since then, under our advisory company, Gravitas, we have worked on close to 100 projects. And this year, a lot of the group companies have been put under a holding company structure, Technicorum Holdings, where we specialize in digital assets, various verticals in the digital asset space. So one is the advisory, another is a launch pad for projects, another is the payments and digital banking and crypto exchange arm. Another is in identity and KYC and AML CFT checks. Another is a VC arm. So we have at Technicorum Holdings, we have different elements in the whole ecosystem. We are quite bullish on the growth of the digital asset space, and this is the primary reason why we are working hard in this space to grow the ecosystem. Now, today, I'll, I'll be speaking a bit more about DeFi and especially NFTs as well. That's something that is upcoming in the next 5, 10, 20 years. So that's something that I believe will be surfacing in 2021 and beyond. And of course, everyone's here for predictions as well. That's always a very popular topic. At the beginning of the year 2020, I was asked what's my prediction for Bitcoin price. My bet was on 30,000 by the end of the year, so that's still possible. But as it looks right now, probably unlikely since there's a small dip before Christmas. Okay, so in 2017, when I first discovered crypto, I was very excited about it. There was very little authority, very few references that are credible. And so I wrote my first book in the space. It's called How to ITO in Singapore. And that was published in October 2017. I'm happy to say that all my predictions in the last chapter of the book came through over the next year. And this year in September 2020, I also published a second book. This is on DeFi. So let me share the screen quickly so you can see. Okay, and this is the book, DeFi, the latest financial phenomenon. So inside the book, there are several chapters. We cover what is DeFi, what's the outlook for the DeFi space, what are some of the legal and regulatory and compliance requirements or points to be looked at in terms of the DeFi space, and what our forecasts are. So why DeFi? Right, DeFi, as Rajan introduced earlier, is decentralized finance, and in the decentralized finance space, there are many interesting technological and financial innovations. Finance has been around for centuries, right? Money has been in existence for almost as long as organized society has been. And the interesting thing about today's society is that we have access to technological tools, and these technology tools and platforms enable us to touch on finance without a lot of central authority. So decentralized finance basically is technological platforms that allow people to transact with each other anonymously, P2P, and it's a vast improvement or a offshoot of the current centralized finance ecosystem. So why DeFi? Why so much interest? If you look at the back of the book cover, I mentioned that at the end of 2017, there were only a few projects in the DeFi space, and the total amount of value locked in the ecosystem was only about 30 million USD. Today, we have seen the value explode to almost 16 billion. It actually exceeded 16 billion, 16.44 billion a few days ago, and now it has come down a slight bit, but it's around 16 billion. So that's a huge increase. I don't even know how many multiples that is, from 30 million to 16 billion. That's a crazy number of multiples, and that's within a short period of 3 years. So let me just show you the current DeFi. So DeFi Pulse is a common place to look at when you're looking at statistics. So it's 15.89 billion total value locked. So TVL is one of the measures to measure the DeFi space, and TVL, total value locked, is represents the amount of assets such as Ethereum, Bitcoin, USDT, USDC, various stable coins. If you can see, Maker is the number one right now at 2.68 billion total value locked, meaning that people have put in assets worth 2.68 billion and created Maker coins out of it. So this is a very interesting read. So that's why so many people are very bullish about the DeFi space right now. From within a short period of 3 months, 3 years, it grew from 30 million to 16 billion. And if you look at the charts here, it's an exponential graph. If you look at a 1 year chart from DeFi Pulse, you can see it's gone parabolic. And the inflection point was from July, at only 1 billion. So from 1 billion, within 6 months, it has now grown to 16 billion. So 16x within the last half a year. And if you look at the beginning of the year, it was less than 1 billion. So beginning of the year was only about $600+ million total value locked in the ecosystem. So this is why there's so much institutional interest, so much farming interest, so much of the retail market coming into the space as well. I'm sure you have read stories about some traders using the flash loans system to generate crazy amounts of returns within one block. One single block on the Ethereum network is only between 10 to 19 seconds. And using flash loans, you can basically just pay the transaction fees and borrow against 3 or more platforms and complete the transaction immediately without any collateral down. So the usual journey is one stable coin changes for another stable coin because of an arbitrage opportunity, and then the second stable coin will swap with another asset class, and then the third asset class will then swap back with the first asset class and pay back the arbitrage amount. So with some very interesting examples of these have really happened, and I've seen this live as well. So some people can just make $20,000, $30,000 just by pressing some buttons and using the flash loan system. So this is very interesting. Most financial products, if someone comes to you and says, "Oh, I can give you 1% return a month, or 5% returns a month, or 10% returns a month," you would think, "Oh, it's very high likelihood of being a scam." But in the DeFi space, it's very interesting. A lot of these are not scams; they are real, and a lot of institutional investors have actually put significant amounts of money into this space as well. If you go to some of the newer DeFi projects, you can easily see yields. They call it APY or APR. APY stands for annual percentage yield, or APR is annual percentage rewards. You can see that they can give you 4 to 5 digits percentages, which means if you are getting something like 3,000 percentage, you are basically tripling your money within a month, right? So that's those are crazy returns, which are definitely not Ponzi's. They are based on the native token value that's established by new projects. And in fact, a lot of the more stable assets or the more established assets like Bitcoin, like Ethereum, like USDC, USDT can even generate much higher yields than the banks. A lot of people are looking for alternative investments nowadays because the banks are giving very low interest rates, like 1% or below, or even negative interest rates, meaning that you have to pay the bank to put the money into the bank. But with DeFi, you can generate returns by, for example, converting your USD into USDC and then putting USDC into one of these platforms and lending it out for a higher yield, which is often a few percent a year. So this is the interesting thing about the DeFi space, and why we are talking today about this space. Another thing that I mentioned earlier in this conversation was the rise of NFTs. So let me just show you a couple of sites for NFTs. So one of them is called OpenSea, and the other is called Raribles. So let me just show you OpenSea right now. And this goes straight into my account since there's cash. These are three NFTs that I have in this particular wallet. These NFTs are from a project that we are working on right now called KingSwap, and you can see this, for example, Queen Sparkle was purchased at 2 Ether. This King Werewolf was at 12 Ether, and this King Vamp was purchased at a 10 Ether price. So just opening up OpenSea, it calls itself the largest marketplace for rare items, right? So essentially, this is a marketplace for NFTs. Why I'm mentioning this is because NFTs is going to be probably, to me, the next big thing within the cryptocurrency space after DeFi. So now you can see a lot of the top searches are for digital art, for virtual worlds, virtual items, for collectibles, and all sorts of new ideas that people have for NFTs. At KingSwap, we have married DeFi and NFTs and are using NFTs as basically a yield boost. So people who are holding NFTs from the KingSwap project will be able to generate higher yields. Think of it as a special membership tier that you own. Let's say if you use a local bank, and if you hold this membership tier, then you get a higher interest rate. So that's essentially how we are optimizing the use of or cross pollinating the use cases of DeFi and NFTs. I mentioned that I'll show you another site, so Raribles. Rarible is another very popular NFT marketplace. So it calls itself the first community-owned NFT marketplace. You can see different NFTs, and you can put your own digital assets there as well. So NFTs, I'll spend a bit of time describing in a short while. So let me wrap up about the discussion about DeFi first. So why do we say that uh, why do we say that the next big thing is NFTs, right? As a lot of people here are probably aware, China takes the lead in a lot of these new innovations. In fact, before the crypto ban in China in September 2017, China was probably representing 90% of the market and speculation. Even now, it's a huge amount, but it's not 90%, and they have gone underground. But the Chinese investors are still looking for the next best thing, the next big thing, and they are always very, very forward looking. And usually the trends are coming out of China, the leading financial trends. So in China right now, not many people know about NFTs, but they are starting to talk about NFTs. And usually that's a leading indicator for the rest of the world. So whatever the Chinese communities are playing with in terms of the space, the rest of the world will pretty soon catch up with it. So they were already doing a lot of DeFi projects, and a lot of these owners or founders are now moving into the NFTs. So that's a leading indicator for the next prediction trend of what's the next best thing, right? So if we look at the last 3 years, I would say the space in the cryptocurrency space has changed practically every 3 months. The whole complexion of the space changed every 3 months. So as of say Q3 2017, Q2, Q3, the big projects, the mega projects such as Tezos came out, and they were able to raise over $200 million. In Q3, Q4 of 2017, two big projects called Filecoin and HDAC were also hitting the markets, and Filecoin raised 270 million, placing it at number 2 for 2017, and DEX managed to raise $280 million, basically a lot of Bitcoin, right? 10,000 plus Bitcoin, and that basically represented the largest fundraise in 2017. So the interesting thing about these big projects is that 3 years since their inception and since their fundraise, Filecoin and Tezos are now top 15 to 20 projects on the crypto markets, and they have produced real use cases and gone to market and are generating revenues. So that put them at the top of the charts right now. Basically, projects that over the last 3 years have been able to show real usage and real revenue generation have been doing pretty well. So that's something that I'm expecting to see again for 2021. Essentially, projects that have gone to market are not scams, not rug pulls, and are hunkering down to build out their product ecosystem, to bring in customers, to bring real revenues and use cases. These are the projects that are doing well. And we can refer to the last 3 years as an indicator. Now, another thing about Ethereum is, of course, the biggest news, right? Moving over to a proof of stake algorithm instead of the current proof of work, and the successful completion of the funding targets for Ethereum 2.0 was completed a couple of months ago, and successful migration or the start of the upgrading of the blockchain has started as of the first week of December. So those were good indicators for Ethereum. Of course, this is a very large project because it's a huge community involved and a huge number of users who have wallets holding Ethereum. So this is a multi-phase project that will happen over the next 2 years. So the target timeline is 2 years for Ethereum 2.0 to come fully live. But there will be staggered rollouts and phase development. So this is something that has spurred the growth of the Ethereum price. And right now, I think it's around about USD 600. I think 1 or 2 days ago, it was 630 to 650. So it has traded down a bit since Christmas is coming, and that's traditionally where most people will dispose of their riskier asset classes and go off for their holidays, and then put it into more stable assets. So that's what I'm expecting to see over the next 1 to 2 weeks. And then in January, the investors will be back from the holidays, and we'll see that some of the token prices will start moving up again. That has been the case for the last 2 years, 3 years. So I'm expecting that trend to be holding true again. The next thing that I would like to talk about is the coupling of and the correlation between the prices of tokens. So Bitcoin, as we all know, is the leader in the space. So Bitcoin dominance is always an important factor to look out for. Over the last year or so, it has been roughly 65 to 70% Bitcoin dominance, which is not very healthy for the rest of the cryptocurrency ecosystem. But nevertheless, that's still a very real statistic. If you notice the DeFi Pulse page that I mentioned just now, you can see that the dominance of the top project isn't anywhere near what Bitcoin has in terms of the cryptocurrency industry. So at the peak of the crypto market, where it hit like 860 billion in January 2018, Bitcoin dominance actually climbed down all the way down to about 30%. And Ethereum was coupled in terms of a pairing of about 11 to 12 to 1 as compared to Bitcoin, meaning that 11 or 12 Ethereum would buy you 1 Bitcoin. But today we see that the ratio is much less. The ratio is something like 30 plus. So a few months ago, Ethereum rose because of Ethereum 2.0 coming up, and it briefly hit about 30 to 1 in terms of 30 ETH can exchange for 1 Bitcoin. And now it's closer to 40. It's around the 36 to 37 to 1 mark. So this is something interesting to look at as well, because it shows you that the Bitcoin dominance is asserting itself, and Ethereum, which is has been a second place cryptocurrency for much of its existence, is still playing catch up. But it really depends on how the market reacts. If the market is still moving institutional, as we have seen over the last few months, more and more big hedge funds are buying into whatever available stores of Bitcoin there are. They don't usually make these purchases on exchanges. They do a lot of these in large volumes over the counter, direct peer-to-peer, and that's why they don't really shift the exchange volumes. But the exchanges have much less supply, and that drives the prices up. So very few instances would see, like $100 million placement in the market to buy or sell Bitcoin, because that will massively change the prices of Bitcoin. But a lot of these 100 million deals are done away from public scrutiny, and it goes straight into safe wallets, and they're hoarded away, and nobody ever sees them again for the next few years. So a lot more institutional players are getting into the space, and that's something that is quite interesting in terms of how the market is evolving. So 3 years ago, the institutionals were nowhere to be found. But in fact, in 2017, I met a lot of forward-looking hedge fund bosses and fund managers who were raising hedge funds to invest into the market. And when they came in 2018, it was at a high. So most of them, I would say 90+% of these hedge funds, crypto hedge funds, actually lost money. So that was an unfortunate entry point for them. But now the huge whales are here to play. MicroStrategy raised 450 million, or rather, they had cash sitting around, and they did an assessment and decided to buy Bitcoin. And then recently, I think about a month ago, they announced that they raised another 400 million to do the same thing. So in fact, in 1 year, they have put 850 million USD into buying Bitcoin, and they'll just keep it. They're not going to do anything with it. Another huge investment portfolio is from Grayscale. Grayscale has put billions of dollars. I think they are probably about 13 to 15 billion dollars into Bitcoin. So they are the largest known institutional hoarder of Bitcoin right now, and their funds. I just saw all their fund instruments being sold out. So the retail market has actually been flooding Grayscale, even though they are selling their units at a higher price than the retail market, but they have basically not enough supply to even meet the demand. So I'm expecting to see them raise more billions in the coming months. Definitely into 2021, they will keep buying. So Grayscale has put a tremendous amount, billions of dollars into the space, right? And with Grayscale, with MicroStrategy, with more hedge fund managers and making announcements of putting significant amounts of portfolio into long-term holding of Bitcoin, that means that the supply is much reduced. So although a lot of people say that Bitcoin is very similar to gold, but gold actually is quite fluid, as in there's always gold in the earth. You just have to dig deeper or try harder. But Bitcoin has a limited supply, and that supply will end in 2140, and there will only ever be 21 million Bitcoins. And these 21 million Bitcoins, there's an estimation that about 10% has already been lost. So about 10% hasn't been mined, about 10% is already gone forever. And more of these institutional investors buying these Bitcoin and keeping them away and never allowing them to come out for open trade daily means that the supply will get thinner and thinner, right? So this is something definitely pushing the price up. Another thing is the vanity factor, right? So if someone asks you how much Bitcoin do you have in your wallet, you're not going to say, oh, I have 0.0001, right? There's no vanity factor there. Most people will go for a whole round number. They will try to keep at least one Bitcoin. But there only 21 million people can actually own one Bitcoin, because there are only 21 million Bitcoin. So the vanity factor is something definitely to be considered. I think that's a minor point, but still something that has a bit of impact. Of course, this is what the Satoshi Nakamoto and basically the creators of Bitcoin actually envisaged, and that's why they created 18 decimal points, so there can be a fractionalization of Bitcoin. But most people still want to deal with whole numbers, so this is certainly something that you can look at. So when I talk about the pricing of Ethereum as compared to Bitcoin, if we are bullish on Ethereum, then we are expecting it to go closer to the historical coupling of 11 or 12 to 1 that was in January or February 2018 to Bitcoin. But right now, it's actually moving the other direction. So it's closer to 40 right now. But even if it holds close at 40, because Bitcoin is expected to rise tremendously in value next year, so I'm expecting Ethereum to also similarly rise. And then this is a dominoes factor. Ethereum is massively impacting DeFi. Why? Because most DeFi projects are based on the Ethereum blockchain. They're based on ERC20 tokens or ERC721 for NFTs or other standards of the Ethereum blockchain. And the gas fees and transaction speeds are make a big impact on the DeFi space. a lot of the institutional and retail investment interest in Ethereum over the last few months has driven gas prices up. In fact, I was just doing a transaction right now, and it's costing 10 times what what it would have cost a year ago. And even then, the transaction speed is very, very slow. In fact, the recipient of the USDT, which is on Ethereum network, is complaining that it's so slow. But we are kind of spoiled in this space, because if you are going through a transaction through a bank and you're doing cross-border transactions, it's usually T+2. And nowadays, with cryptocurrency being such a convenient factor of wealth transfer, we're expecting T+0 and even within minutes. So this can certainly happen when Ethereum migrates to a proof of stake by going to Ethereum 2.0. But in the meantime, a lot of projects are implementing layer 2 technologies. So, for example, at KingSwap, we are also doing the same thing. We are massively bogged down by the slow transactions and the massive gas fees that have to be paid. So we are making improvements in the ecosystem so that our users, our investors, can use the platform more cheaply and quickly. Right? Too many people don't want to do the transactions because the price of each transaction is too high due to the gas fees and the network blockage in Ethereum. So with layer 2 implementations, there will be an off-chain load on the transactions, and that means that they can be cheaper and faster. So these are certainly implementations that you'll see over the next year. In fact, projects like Polkadot managed to jump into the top 10 in terms of market value, simply because they are suited for interoperability, and a lot of projects are starting to build on the Polkadot system. Cosmos is another network, another protocol that people are looking at, and a lot of these new protocols, or the protocols that have been around for the last 2-3 years, which will promote interoperability, is certainly going to be something that you should look out for. So to wrap up this point about Ethereum and DeFi, my belief is that DeFi will still be growing for the next 1 to 2 years at least, because new technologies and trends in the space generally go for 2 to 3 years before regulators come in with new rules and cramps on the burgeoning technology market. And so that means that there's still a runway of another 1 to 2 years. And if you can see, even though people keep saying that it has hit its peak, but since every single month, the total value locked in the DeFi space has been growing. So I expect to see that keep growing. And at a number of 16 billion right now is still nowhere near all the trillions of dollars in the various asset classes. I mean, the main investments and financial products are in a few classes. Firstly, real estate, right? Secondly, in commodities. Thirdly, in cash and equivalents. And fourthly, in equities. And these have been around for, I think equities has only been popular for probably the last 100 plus years. So there are new asset classes coming up. The new asset class that's coming up to join these 4 traditional asset classes would be digital assets. And at 16 billion, a mere 16 billion, that's nowhere near the trillions of dollars in the other asset classes. I think gold is now probably at about 10 trillion. Just last year, it was only 7.5 to 8 trillion, but the gold price has been going up towards $2,000. I haven't been looking at the gold prices right now, but if it's anywhere near 2,000 or beyond, it's going to be hitting 10 trillion. And just imagine the gold as one asset class. Any of these other asset classes could easily be as big as gold, right? And that means that the 10 trillion mark could be something that is certainly a number we can shoot for. Of course, on top of these 4 traditional asset classes is also sitting derivatives. Derivatives alone is the same size as all the other asset classes put together plus more, because it's a black hole that nobody even knows in terms of the derivatives market. But to me, digital assets has been showing its value in the space, and certainly it exhibits a lot of the characteristics of all the other asset classes. And NFTs, which I mentioned earlier, which lend themselves very well to the blockchain space, to the to staking of traditional assets, will certainly make itself known to the world over the next 5, 10, 15 years. And there's no stopping NFTs, because it's very easy to use a secure blockchain instrument like a token, and with its characteristics as a unique, non-fungible ability, it can represent things like real estate, like shares and equities, financial products, etc. So NFTs, my prediction is that not only in 2021, but way beyond that, it will keep growing in terms of its market value. So this wraps up my introductory keynote, and I'll be speaking with you again at another session later on. But thanks for spending the time here. Um,
We,
right, hi,
yes,
Rajan.
Malcolm. We have a question from the audience.
Sure.
What do you think of STOs, which are backed by assets when compared to cryptos?
Right. So STOs have been popular since 2018 in the US because the US SEC basically took the position that all ICOs were STOs, right? So that's where you were hearing a lot of terminology like Reg D, Reg S, Reg A, because those were all the regulations coming out of the US. And because so many founders were US citizens or so many projects were based in the US, so a lot of these STOs actually originated from the US. Now, my expectation is that STOs will be growing over the next 5 to 15 years, but there's no liquidity right now. The problem with STOs is that they're overregulated. So STOs suffer from the same restrictions as traditional asset classes and traditional financial products. What this means is that there will be dealer broker licenses, capital market services licenses, securities licenses required from any broker or dealer who is dealing with such asset classes. And STOs, security token offerings, are essentially pegged to such financial instruments as well. So that means that anyone who's trading a STO has to be an accredited investor or needs to have to go through a licensed broker. And so that means that cross-border transactions are very, very difficult. It is the same as if you are trying to sell your shares from one country to another, right? You will need two sets of brokers with the licenses. So that is a natural cramp on the liquidity of STOs. But having said that, STOs are useful in some cases. They enable the fractionalization of asset classes such as funds. So, for example, if you have a tokenized fund, instead of having a unit which is a direct investment by one prospectus or subscription document, you can actually break up an investment into tokens. And then if you break it up into the security tokens, it's much easier to flip that to somebody else rather than to go through all the paperwork of transferring your securities. So my answer in short, that was a long answer. My answer in short to STOs is that there is some utility in it, but it's not going to be liquid in the very near future, right? So that's something that with more laws coming up and more interoperability in the global financial ecosystem, STOs will make itself known. But for now, there are still natural limits to them.
Okay, Malcolm. Thank you for the excellent insights. We go for the next session.
Okay,
We have
thanks.
a founder talk. Thank you.
All right.